It's the last edition for the week. Good morning and welcome to Business Morning. I'm Ini John Mekwa.
I'm Larry Williams. Thank you for joining us. Oil prices rose Friday on track to post big gains for the week and worries about near-term supply disruptions as energy companies began shutting in production of Mexico.
And U.S. West Texas Intermediate crude futures climbed 16 cents to $67.58 a barrel, while Brent crude futures similarly rose 16 cents to $71.23 a barrel, and that's after falling 1.6% on Thursday. Companies have started airlifting workers from Gulf of Mexico oil production platforms and PHP as well as BP saying that they've begun to stop production at offshore platforms as a storm was brewing in the Caribbean Sea, forecast to barrel through the Gulf on the weekend. Gulf of Mexico offshore wells account for 17% of the United States crude oil production and 5% of dry natural gas production. Over 45% of total U.S. refining capacity lies along the Gulf Coast. The prospect of U.S. Gulf supply outages helped turn the market around from losses yesterday, which had been partially spurred by output returning at a Mexican oil platform following a fatal fire.
And the Nigerian Petroleum Corporation, the NNPC, has posted a profit for the first time since it was established 44 years ago to explore and sell crude. The corporation made a net profit of 287 billion naira in 2020. That follows losses of 1.7 billion naira in 2019 and 803 billion naira the year before. Commenting on this, we have Olabode Showme, Chief Executive Officer of Captree Limited and Special Legislative Aide to the Senate President. Great to have you on the program.
Yeah, thank you. Good morning.
Good morning.
It's nice to be with you.
Yeah, so after 44 years, what changed?
Well, I think it needs to be put in perspective. The PIA is out. There's going to be changes, and one of the changes that is going to happen is structuring and the system that will be more transparent. So let's just say this is a prelude to better things to come. The NNPC has moved from like about 280-something billion in terms of loss 2 years ago to less than $1 billion, and now we're having a profit that is in the range of $500 million. I think it's good news any which way you look at it. I mean, there are those who are of the perspective that it could be more, but we need to thank God for small mercies.
Yeah, we thank God for small mercies, and we hope that this is sustained, especially looking at the changes that we expect to come along with the Petroleum Industry Act.
Yes, I think that is very correct. With the Petroleum Industry Act, I think, like I said before, there's going to be changes to the structure and the fiscal of the way the industry is run. But more importantly, for any system to work, whether it's in the US, whether it's South Africa, wherever, it needs the active collaboration of stakeholders. And in this case, the media, the civil society also has stakeholders. So it's also incumbent upon us to monitor the system, to ensure that we compare it with favorable companies that are within that range, and ensure not only are they profitable, that they take initiative, they are proactive, and they make the industry value chain worthwhile.
All right, we need to thank you so much, Mr. Showumi, Chief Executive Officer of Captree and Special Legislative Aide to the Senate President, for sharing your thoughts with us.
Thank you.
Celebrate, like you call it, the little messes.
Celebrate the small wins.
The small wins coming from NNPC. We do expect more.
Yeah.
We are very expectant. Thank you so much and enjoy the rest of your day. Now, moving on now, the Lagos State Governor, Babajide Sanwo-Olu, says he's making plans to provide better electricity for the public. Governor Sanwo-Olu announced that the state is working towards providing 20 hours. I would love it to be 24. 20 hours uninterrupted power supply for residents and business owners in the state. He made this known at the 7th edition of Lagos Corporate Assembly, BOS, as they met with business, where he also assured of delivering a new hub for commerce at Kappa in Oshodi area of the state.
I welcome you to the 7th Lagos Corporate Assembly.
It's the 7th edition of Lagos Corporate Assembly, Boss Meets Business. Creating an enabling environment is the key to economic development, For this reason, the state government is meeting with the private sector in the state on how best to improve the business environment and help increase the GDP of Lagos. The Commissioner for Commerce, Industry and Cooperatives kickstarts the event with an explanation on the level of investment ongoing at the Lekki Free Zone corridor.
This assembly has become an advocacy platform where the state government and the business community converge to discuss issues of shared concerns.
We have a strong presence of federal and state government MDAs in the zone as well. We also have the Lekki Deep Sea Port, which is being developed to be the deepest and biggest seaport in West Africa. I believe that we are about 16.5 meters deep on shore.
Some of the stakeholders in the industry make their presentation and prefer ideas on how to boost the state economy.
Trucks parked in the front of the manufacturing facilities awaiting offloading of the imported raw materials are being impounded as early as 6 a.m. And the companies are being subjected to pay fines for offenses they do not understand.
We encourage the state government to establish more programs that enable businesses to thrive, as this enables more compliance with tax payments, which in turn supports the state's IGR projections.
Governor Babajide Sanwo-Olu takes the stage explaining how government is supporting the people and other steps taken to make Lagos a 21st century economy.
We're installing 20,000 meters in various locations, various small businesses in the state. And we're going to be doing this with the 2 discos that we have in Lagos. What they have assured us is that they can also guarantee minimum of 18 to 20 hours of steady power in a lot of these places. And we're looking at high population areas, the rail. Last quarter next year, we should begin to do testing so that by the first quarter 2023, we should see the 2 rail projects start up in Lagos.
The Lagos Corporate Assembly is a platform for engaging businessmen and women, and the state government is assuring the stakeholders that this is not just a talk show. All issues highlighted here will be well addressed.
Well, another win in the country is Nigeria's gross domestic product, which grew by 5.01% year-on-year in the second quarter of this year. This marks 3 consecutive quarters of growth, following the negative growth rate recorded in the second and the third quarters of 2020. This is a leap because the last time we had it was 0.51. That's the first quarter of 2021. Analysts have said that this is just an indication of return of business activities after the restrictions to curb COVID-19. What is the government saying? We have Ajuri Ngilali, Senior Special Assistant to the President on Public Affairs, to tell us what the government is saying about this. Hello, Ajuri. Good to have you on the show. Good morning.
Good morning to you. Truly a privilege to be with you.
Yeah. So I guess congratulations are in order. The economy has grown by 5.01 from one quarter to the other, 0.51 to 5.01, the strongest since 2014. But analysts are saying we shouldn't just, get too happy because it's just a rebound from the COVID-19 restrictions.
Thank you very much. First and foremost, we're quite proud of the results, of course. We're happy that Nigeria is on the kind of trajectory that all of us would want in terms of the direction in which the economy is headed. But by no means are we spending our time, patting ourselves on the back and dancing. We recognize that not all is yet uhuru. There's still a lot of work to be done. But I think one of the areas where we really want to dig into kind of the data and the content of the latest GDP report is really the fact that the report itself assessed that for the first time in a very long time, that we are now moving towards what is truly an inclusive economy. Most of the data clearly suggests that right now we have a scenario in which our growth in the services sector, which we all know is labor intensive, has grown to the extent of nearly double digits, about 9.2%, the highest since 2010, the highest in more than a decade. That's very encouraging. when you look at the fact that the non-oil sector contributed about 6.7% to GDP. That is the highest rate of non-oil sector contribution to the GDP since the third quarter of 2014. So we are making a lot of progress. And I don't think that it would be quite accurate to suggest that the recovery is simply kind of a natural reaction of reopening the economy. If it was, I don't think we would be seeing growth rates that have not been seen since 2010 and 2014, for example. I think that's part of it, certainly. But then obviously, there's no doubt that the administration of President Muhammadu Buhari has put in place verifiable and measurable measures to inject further life into the economy. You may recall that we put in place the 2.3 trillion naira economic sustainability plan, overseen and implementation by His Excellency the Vice President, Professor Yemi Osinbajo. And that was really a multi-sectoral intervention across the power sector, the work sector, agriculture, housing, and the like, social investment, MSME capitalization, that really ensured that we are empowering Nigerian-owned businesses who employ Nigerian-owned labor, who will use indigenous Nigerian raw materials for the construction of houses, roads, and other elements across the economy. And we've now seen the effect of that when we've looked now at these GDP numbers.
All right, the federal government believes economic sustainability plan has the credits for this growth. So where are the benefits from this plan? Where can we see them?
Yeah, well, first and foremost, some of it you would see separate from kind of the notion of how bad would things have been if the economic sustainability plan had not been in place. So, for example, when you're in a recession and you're battling out of it, and you know that you have hundreds of thousands of MSMEs across the nation who are on the precipice of sacking their workers because they simply could not afford to pay salaries at a time when the economy was essentially shut down, not to speak of the global supply chains being shut down at a certain point. So government's intervention through the economic sustainability plan, part of it was the survival fund, where we were able to verifiably and measurably save 1.3 million jobs across 500,000 MSMEs in all states of the Federation, across all local government areas of the Federation. So when you look at it, you may not necessarily tag all of that, job growth. But what you've done is
Okay, I think we lost Ajuri there due to network, and I'm sure we will get him back. And, it's an interesting question you asked him, about where are these?
See these,
Yeah, because this is a conversation that's really going around. Even if you watched Politics Today last night, when Sheung had a conversation with the former DG of LCCI, these are some of the things that Nigerians are asking, that we are seeing these figures, but we would like, we're hearing the figures, we would like to see and feel the figures and see it in our lives, and these are some of the questions that Nigerians actually are asking the government.
Not just figures.
Exactly. I think we have Ajuri back. Ajuri, are you back?
Yes, I am back indeed. Thank you very much, and sorry about the postponement there.
All right. So do you want to pick up?
Yeah, that would be great. Thank you very much. So to the point you were making during the interregnum that, Nigerians want to feel the jobs, I wanted to mention the fact that we've been able to save jobs that would have been lost before I go into the new jobs. So in terms of the new jobs, what you're looking at, of course, it's no secret that we put in place the National Special Public Works Program, in which we put 774,000 young people, young Nigerians, to work across all 774,000 local government areas of the Federation, 1,000 from every local government, reconstructing rural roads across the nation. We've already successfully linked 500 markets across the country through this, Special Public Works Program under the umbrella of the Economic Sustainability Plan. So you're having impact there. And then in addition, because the economic sustainability plan was fundamentally and intentionally built to maximize the multiplying economic impact across multiple sectors of the economy. All of the goods that we use to reconstruct rural roads, we sourced our bitumen locally. So none of the materials we used were imported, for example, ensuring that vendors across the nation in all of the various local governments are being patronized directly by the federal government of Nigeria. This is extremely important. So you have that new set of jobs. Then in addition to that, we've been able to also support MSMEs with new capital so that they can actually expand their existing operations. If you look at the program that we put in place, for example, for exporters, the Export Expansion Program, where we're providing grants. These are not loans. This is not just like the Survival Fund. They don't have to pay it back. Grants to exporters to essentially expand their existing operations, employ more Nigerians within their MSMEs, while also expanding the nation's stock of exports to other countries across goods and value chains, from cocoa to finished products like chocolate, vegetable oil, plantain chips, so many different items. So there are so many different interventions that we brought to bear under the Economic Sustainability Plan, and even outside of the Economic Sustainability Plan, where these are actual jobs paying for the uplift of several families across the nation, school fees, and all of the other things that are involved. And I have not even mentioned construction. If you look around this country right now, external to the Economic Sustainability Plan, you have mega projects everywhere. There in the Southwest, of course, it's no secret. I'm sorry.
So one of the things I think that will help Nigerians to understand and flow along with this administration would be if they saw these things in pictures. Because even as we have this conversation, yes, people are watching and they're like, oh, we hear that and we hear this all the time. Where are they? So perhaps, Ajuri, you know about broadcasting. You should get this thing in pictures and let people see. But other than that, there's also the issue of ease of doing business. And some time ago, we spoke to manufacturers, and they said they do feel that the government is making efforts in the issue of ease of doing business. But when it comes to reducing cost of production, the issue of multiple taxation, it is still an area that seems the government hasn't done much. So if you want to save jobs, obviously the manufacturers need to feel the impact of ease of doing business.
Thank you very much. So to the initial observation you raised concerning the need for pictures, for example, before the incident took place with Twitter, I've been very active on social media, particularly Twitter, Facebook, and others. We were very, very, diligent about making sure that all of the various projects that we're engaged in, that we are sending almost monthly or weekly, in some cases, updates of the projects from one stage of development to another. The 44 Sukuk roads on my Twitter account, for example, and I'm sure the relationship between the Nigerian Federation and Twitter will soon be restored. You would have seen all of the pictures, the level of completion, even the economic data around how much was paid to the contractors. We've been very transparent about all of that, and we will continue to be. I think when we talk about ease of business, there are a few aspects of this that are important to note. If we're referring to multiple taxation, it's also important for us to recognize that multiple taxation involves multiple tiers of government. And so the federal government can do a lot in terms of streamlining taxation, making it easier for people to pay their taxes, and all of that, and also cutting undue tax liabilities on companies. And we can go into measures that we've put in place along that line. But in so doing, we should also mention the fact that when we talk about multiple taxation on companies, where the shoe is really pinching the foot of these MSMEs and even some of these large corporations is really the role that state and local governments are playing in terms of, levying several taxes that many of these corporations feel are excessive due to the fact that, many of their operations are at a certain level of government, in their opinion. So that's a major issue. So what we have done to answer your question around solutions on the multiple taxation issue is under the leadership of His Excellency, the Vice President, the National Economic Council had convened the 36 state governors, and already we've come to an advanced place in terms of getting the state governors on the same page with the federal administration around how we can all effectively streamline tax administration in such a way that, look, we have to recognize any factory or industry that wants to come into a state is good for not just the state, but for the federal government. So that new tax revenue and that investment should not be hindered by excessive taxation on the part of state and local governments. And we're working with them on that.
All right. All right, Ajuri, we'll just ask you to hold on a bit. We need to go on a break. When we come back, we have more to talk to you about, especially when it has to do with the GDP. So please do hold on. We'll see you shortly after the break.
Welcome back. You're still watching Business Morning. We still have Mr. Ajuri Igalale, SSE to the President on Public Affairs, still here talking about assessing Nigeria's Q2 2021 GDP. Thank you for staying with us.
Thank you for having me.
All right, so the average growth in the first half of 2021 is now 2.70%, and this implies that the Nigerian economy will need to grow at an average of 2.5% in the second half of the year to achieve a target growth of 2.5 to about 3% for 2021. What's the plan to sustain this trajectory?
A phenomenal question. Thank you very much. So really moving forward, we have to be very aggressive about the implementation of the most recent movements. You know, one of the that we really started driving, and I want to be very precise about this. If you look at the numbers, you find that where historically, and this is why I was earlier referring to the fact that you're seeing growth where we want the growth to be, which are the labor-intensive sectors, such as the services sector, the rail sector, and the like, and where we had actually seen a little bit of dip, interestingly, was in the oil and gas sector, where, of course, the oil and gas sector is well known to be capital intensive, yes, but labor intensive, not so much. It's quite non-intensive. So what we have done now is moving forward. You referred to the NNPC's movement into profit. 2018, NNPC reported a loss deficit of 803 billion naira. In 2019, that deficit was bridged down to about approximately 1.7 billion naira. And then, of course, we've just reported the first total profit of 287 billion naira, the first time in 44 years, as you said. Now, the reason why I raise that is because moving forward now, what have we just done? We've just, the President Muhammadu Buhari has assented to the Petroleum Industry Act. Right now, as we speak, we have OPEC curbs in place that limit our production to about 1.6 million barrels per day. We have production capacity in this country, oil production capacity of 2.3 million barrels per day. The OPEC curbs are expected to expire in the early part of next year, meaning we should return to normal output. That is going to be a major boon to our revenues. That's number one. Number two, one of the most underreported aspects of the Petroleum Industry Act being assented to by Mr. President is the fact that we have about 8 deep offshore oil mining fields with productive capacity of about 875,000 barrels per day, which would take us above the 3 million barrels per day production benchmark as a nation when fully produced. What is now happening is those international oil companies have done everything in joint venture with the NNPC to basically say, look, we've done the feasibility, we know what is there, but we don't want to begin production until we see the final content of the Petroleum Industry Act, which is why it was within the wisdom of Mr. President to say, look, this is going to be compiled with a consultative process with the IOCs at the table, traditional leaders from the Niger Delta at the table, the legislators at the table, and the executive branch at the table to make sure that it's a win-win document, not unduly favoring one group over the other. Now, the point here is that when this new production comes on stream, because now that the PIA is assented to, the international oil companies in these 8 deep offshore projects, specifically Bonga Southwest and Akoro, Bonga North, Bosi 1 and 2, you have Zaba Zaba, you have Uge Field. These are the fields that we're about to get into now with the IOCs. Once they begin production, we're talking about tens of billions of dollars of new revenue to the Federation to be shared across all tiers down across the 774 local government areas.
So, when you talk about oil and all that, I mean, this is a whole lot, is another line of conversation because, I mean, I'm sure you're following the MTEF meetings, and there we realize we don't even know our daily consumption. I mean, we were talking of crude theft, and the GMD of NNPC said, we don't even know how to solve that. So even though you're mentioning these potentials, I think when you look at the reality, you find out that we also have a lot of hindrances that would not easily bring these things to come to pass. You have crude theft. I mean, you have a lot of things going on there. So even though these things sound very laudable, you know, when you come to the reality of it. But, I mean, we're not talking about NNPC and all that. We're talking of the GDP and, you know, the basic economy. So now there's also another issue of inflation. We've had inflation tapering for a fourth consecutive time now in July to 17.38. Always beating economists and analysts' expectation. And so much so that a lot of people are beginning to question. I mean, we see these inflation figures. It doesn't really match what we are seeing. And people are asking, okay, one of the economists we spoke to said the NBS, I beg your pardon, need to repackage their basket of commodities which they use, you know, to measure inflation. So I don't know if you have thought along this line or if you have heard conversations along this line of people kind of questioning, you know, these inflation figures.
Yeah, thank you very much. I would be remiss not to respond to the initial observation you made. I must respond to that. I think before I go into your next question, the question that my brother asked me was, how do we sustain the growth moving forward? That's what he asked me. So what I was saying was that we had essentially achieved 5% GDP growth in the second quarter with a dip in oil and gas from the sector. And what I am now explaining is that with the PIA assent and with the reforms within the NNPC, right, which are verifiable for everybody to see, what we are now going to have are dramatically enhanced revenues, meaning that the share of oil and gas to GDP over the next several quarters will be much improved over what it is now, meaning that the growth that we're recording in the non-oil sector will now be accompanied by massive growth in the oil and gas sector, meaning that the growth will be sustainable. That's why I mentioned all of that. And the last point on your observation is that the Petroleum Industry Act goes to address several of the elements that you mentioned. Pipeline vandalism and infrastructural compromise, for example, has been addressed. That's why we put in place approximately between $500 million to $1 billion, depending on the expenditure in the sector every year for host communities, with the condition that any host community that compromises their infrastructure will have the repairs of that infrastructure deducted from their host community trust allocation. So we've addressed those issues in collaboration with stakeholders in the Niger Delta. So we believe that the issues you referenced will be things of the past now that this act has been assented to. But to the other issue you've now raised about inflation, first and foremost, the inflation figures, we are quite, of course, optimistic about the fact that we've seen 4 consecutive months of reduction in inflation. But there's really no doubt that the overall, tabulation and collection of data in the country it requires further reform. We understand that. For example, when the NBS, for example, tabulates unemployment data in the country, and of course, all of us cite unemployment data in the country generally, it's now well known that you have millions of informal MSMEs across the nation who are being tabulated or recorded as unemployed, meaning that they are tabulated and reported as under the poverty line, when in many cases, not only are they above the poverty line, but they're actually employing other Nigerians who are above the poverty line. But because they are not formally integrated into the formal economy, they're not counting in the unemployment figures. So there are quite a number of reforms that have to be undertaken in terms of how we collect and manage the nation's economic statistics. But be that as it may, we recognize that we've made some progress. We're not dancing and celebrating yet. There's a lot more work to do, but there's no doubt about the fact that we are on a very positive trajectory moving forward.
All right, Mr. Jury Igalale, thank you so much for your time on Business Morning. Senior Special Advisor to the President on Public Affairs. It was great having you on Business Morning. Thank you so much.
Truly a privilege to be with you. Thank you so much.
All right, now to our next conversation. The Revenue Mobilization and Fiscal Allocation Commission has restated commitment to the review of the extent of vertical revenue allocation formula to the 3 tiers of government in the country. The current revenue allocation formula stands at 52.68% for the federal government, 26.72% for the states, and 20.6% for local government areas. This is the vertical arrangement at the moment, and it has been the arrangement since 1992. Well, we have Mr. Paul Alaje, lead economist and enterprise partner at SPM Professionals, here to share his thoughts on this. Great to have you on the program.
Yeah,
good morning.
thank you so very much for having me, and good morning.
Yeah, so this sharing formula has been on since 1992. Is there a need for this change, or is this just time for, for this to happen?
Well, I think long before now, this should have changed because when you notice that before now we had about 500 plus local government, now we have 774. So what we gave to 500, if you are giving it to 774 local governments or area councils, it is certain that that will not be sufficient. We do not have up to 36 states. Now we have 36 states of the federation. We have new challenges that is more, when you look at what is happening in Kaduna State, people that live in Kaduna, we feel it more than people in Lagos. So adjusting the way revenue is shared, it's something that is so very important. And when you look at the state of infrastructure, you see some level of presence of government when it comes to federal government. But when it comes to state government, I give you an instance when it comes to railway. There is nothing that says federal government must construct railway all everywhere in Nigeria. We have the same way we have road, we can have state rail projects. We have Lagos State trying to pull that through Red Line and Blue Line. But how many states can do that, can do what Lagos is doing? It's going to be a big challenge. And all of this is because revenue sharing as of today is not by functionality of state and local government. So we have the opinion that government should readjust what is distributing, first to favor state and local government. As we speak, federal government alone get bigger share of this revenue from the figures you share, 52.68%, compared to state government that get 26.72% and local government at 20.6%. This is too small. And that is why attention and concentration, everything is on federal government because it gets the biggest share of the quote and unquote national cake. And when you ask what is going on in local government, a lot of people don't even know the names of local government because when you look at what goes to them, and I also don't want to start the conversation that even the revenue for local government gets to state government for. And I'm happy that the Revenue Mobilization and Allocation and Fiscal Commission is saying, before we deal with relationship between state and local government, let's first see how we can readjust it vertically.
Okay. So you did talk about that what should be considered should be functionality. So what for you would be the appropriate sharing formula? What should be the factors to be considered?
I think, first of all, responsibility being carried. Internationally, there are some parameters we use before we talk about fiscal federalism. And by fiscal federalism, we are talking of share of power, share of responsibility, and most importantly, share of resources. So in all of this, you have to look at first equity. You want to balance state. You are not saying states should be equal. I don't think Sokoto, Imo, and Lagos can be equal at the same time because Lagos has water, Sokoto has vast land that Lagos do not have. So the state cannot be equal. But in balancing growth, we are saying different states should grow at their pace, but when market fails, when we have market failures, we can have government intervention so that everybody will grow. That does not mean we should slow the growth of Lagos because we want Imo or Sokoto to grow, or we should slow the growth of Sokoto because we want Lagos and Imo to grow. That's not it. So we'll be looking at equity. We also be looking at administrative and efficiency, which for me is the most important thing. States that are doing well in IGR should also be considered. We also have states with unique challenges, such as what is happening in Borno, over security and so on and so forth. We have a lot of states that are producing food for us. We have seen what National Bureau of Statistics have been sharing, about 20% for food inflation. And even before now, we have seen that number even grew to about 22% in food inflation. How do we support, how we intervention or some of these revenue sharing with target state and they will not just be revenue you have just to do anything. It will be revenue you have because National Assembly needs to pass bills to law to say more responsibility will now go to state and local government, because when you earn more, it is expected that you give more in terms of responsibility.
Right.
And all of these are the things why we think that it is important we make revenue to be based on function or functionality.
All right, looking at this issue of VAT collection, where does this come in with this, sharing formula? Because, if the states actually start, collecting VAT, how would this, affect this whole?
Well, for me, I think VAT should be centrally collected, but the sharing of VAT should be more to state and local government, pretty much what we're experiencing now. When you look at federal structure, that structure seems to be there already for tax collection. And for most states, not all states, Lagos seems to be different. For most states, federal government seems to be more efficient in collection, even though the collection is still very poor across board. So, but if states can guarantee that they're going to put up structure and system in place to get more revenue, then they are closer to the people, they are closer to workers, then they are also closer to consumer, because we are talking of VAT here, not just the working population. Right. Then they can get more. But as we have it today, structures and systems are not in place even at state level. I'm aware of, I think, a court ruling that favors one of the states, which I would not like to mention.
Right.
But when you look at that,
we have been talking about his Rivers State.
But can we say that this is applicable in some states, for instance, other states? We're going to be setting back the revenue drive.
Well, don't you think this will serve as a motivation? I mean, if it's now based on what you make, then states will now be forced to look inwards.
Right. Yes, and I've mentioned that we should be based on what states generate internally. And I can tell you, for instance, you go to bank, you run fixed deposits, banks wants to pay withholding tax. Most states, I've interacted with a number of states to help with revenue generation. And in speaking with some of the chief executives of the states, some of them were even shocked that withholding tax were supposed to be remitted to them. And we approached one of the commercial banks who claims all the withholding tax in the state are first taken to their headquarters. And where would they remit? It's not that they remitted to Lagos state government. No, because the revenue was not generated in Lagos state. So the state is losing, Lagos is losing, nobody is getting the money. And you may ask, go to your bank, if you have done fixed deposit in recent time, that you want to have your withholding tax certificate. They will tell you they want to start processing it. And this is a reality. So it's just an instance where state government, to some extent, because I know governors will be busy with development, politics, at the same time with economy. But when it comes to revenue drive, all of this reality, where Nigeria today, I believe in the next 20 years, things cannot continue to be like this. We have to develop either naturally or by putting action into this development we have so much spoken about. So state government, there is need for education and more synergy between tax authority at federal level and also tax authority at local and state level. But for now, there are lots that state can even make, already that state authorities they are not making this moment today.
All right, looking at, revenue and spending, there are concerns that some have said Nigeria has a spending problem, not a revenue problem. What's your take on that?
Well, for me, we have huge revenue gap. There is nothing we can say about it. We also have spending challenges, spending concerns. But when you look at our budget, the budget is about 15 trillion. Convert that to USD, convert that to dollars, and see what it comes to. Then compare it with 2, 3, 4 top university outside Nigeria, UK or US. You see that we are doing really little. Divide the entire budget by the population of about 210 million people. What is spending in that? We are not even spending enough if we are generating enough. And I can tell you that Nigeria federal government can generate up to 40 trillion naira. Mark you, the last budget showed we'll be generating about 8 trillion naira. And I'm saying that as of today, we could do 40 trillion naira. And I'll give you an instance. Look at the figures National Bureau of Statistics shared and sector that have grown. Telecom seems to be consistent with growth, unlike transport sector that grew by over 90%. and the trade sector that grew significantly, energy and power that grew by over 70%. Why? Because people were under lock and key this time last year.
Yes.
So it means they were not going out. Now they are going out, so people can go by transport, particularly road transport, according to that report. So compare that, with what we are talking about regarding how government will generate revenue. Telecom seems to have been consistent, 14% at a time, 7%, but the revenue that goes to both federal and state for telecommunication is not improving.
So you're saying there's something that should be done about taxation of telecommunication?
One, I'm not sure if authority even know how to tax telecom sector. I'm not sure. I'm not sure if we know what to do. Because if we know what to do, as that sector is increasing, and you see infrastructure all over the sector, you see we can get rent, we can get access fee, we can get... Some telecom are still paying on BTS as low as 50,000, for access fee to some states. Who does that? Convert that to dollar and see what the same organization pay outside Nigeria. Okay. Meanwhile, we have more population than those countries. We spend more than those countries. Yeah. We speak more than those countries. And our culture even allows us to speak. But when it comes to what comes to our government, it is slow, it is abysmal, and I think authority need to do something quickly, not just about telecom sector, even about other sectors. What I think authority should do, beyond looking the numbers, is to compare the growth and ask them what is happening to their books regarding revenue that they are getting from those sectors.
Mr. Alaje, really, thank you so much for being a part of our conversation this morning. Obviously, we still have a whole lot more to talk about.
Oh, yes.
And I think you're spurring the authorities, the tax collection authorities, to wake up and be innovative in the tax collection. Thank you so much for sharing your time with us. Mr. Paul Alaje is the lead economist and enterprise partner at SPM Professionals, and he talked to us about the proposed revenue review of revenue formula in the country. But we'll take a break now. When we come back, we'll head straight to the markets. To stay with us, it's Business Morning on Channels Television. You're welcome back. We head straight to the markets now. And I think the market was in the positive yesterday, Will?
Oh, yes. Good morning, Nini. The stock market took a U-turn into the positive zone yesterday, and this thanks to investors' interest in First Bank, Presco, and Eterna. Eterna stocks rallied most in the market, up by about 10%, and this may be connected to the latest news in the markets of the new investor who acquired more than 3/5 of the shares of Eterna. The all-share index edged up by about 0.07% to close at 39,477.18 basis points, while the value of listed Nigerian stocks rose by about 15 billion naira, and the year-to-date return was lower at 1.97%. The total volume of trades decreased by about 6.1% to 186.32 million units, valued at 1.79 billion naira, and all traded in over 3,500 deals. Analyzing by sectors, we see that the oil and gas, insurance, banking indexes recorded gains, while the consumer goods and industrial goods indexes closed flat. In all, it was a positive market breadth in yesterday's trading session. We have our guests. We'll move over to the NASD. Before we take our guests, we'll move over to NASD index, where the bear continued its negative trajectory in that zone. It was down by 0.29%, and the index was at 728.13%. Now, to talk about it, we have Kayode Olayemi, stockbroker at CSL Securities Limited. Good morning, Kayode.
Good morning, Will. Thanks for having me.
Kayode, we'll just jump right into it. We have had a choppy 4-day trading session so far. However, some analysts expect yesterday's positive trend to continue today. What's your take on that?
I think all week the market has sort of been trading sideways, up today, down tomorrow. And that's pretty much because the prevailing conditions haven't changed much. The FX situation still persists, and the local investors are still staying on the sideline. So that's pretty much why we're seeing that choppy nature of the market. All the activity we've seen, if you look at it, have been with the mid-tier and small-cap companies. So the large cap companies are the major drivers that could sort of give the market a clear direction, have more or less been flat. So probably continue to see that sort of trend in the days ahead.
Okay, great. Are investors taking position ahead of the corporate releases in the banking space? Because we're yet to hear from them.
I wouldn't say that you're taking position in the banking names. Because most of the names there, the tier 1 banks that we're still expecting their numbers, they've also either been trading down or trading flat. So I wouldn't say that investors are sort of building up positions. I think that a lot of investors are sort of staying on the sidelines and watching, trading cautiously with regards to those names. Even though we don't expect any major surprises, we know that they're going to release their results once CBN approves them. And the delay probably is because of the audit that they had to do because of the interim dividends that they're going to have to pay. So we don't expect any major surprises from them, but people are just sort of being cautious and not making any big moves at this moment.
Thank you so much, Kayode, for your input. That's Kayode Olayemi, a stockbroker at CSL Securities. So that's what we have today. Ini, back to you.
Thank you so much, Will. Just before we get to the crypto market, let's go to London now. The European Union is set to launch a formal competition probe into NVIDIA's plan of $54 billion takeover of British chip designer ARM early next month. The investigation is likely to begin as NVIDIA officially notifies the European Commission of its plan to acquire ARM. Britain's competition regulator said last week that NVIDIA's planned acquisition of ARM could damage competition and weaken rivals, and required a further lengthy investigation. Well, I think we can head over to the crypto space now. Ladi, for the 4th time now, I think, we're having a Green Friday.
Thank God it's Green Friday.
Thank God it's a Green Friday.
Yeah, so, we have Bitcoin, but it's quite mixed because we only have Bitcoin and Ethereum in the green, and Solana doing really well. Major altcoins are in the red this morning, even some of the stable coins at this point. The market cap is still flirting with this $2 trillion market cap. It looks like it wants to go below $2 trillion. I'm watching that. But we know how the weekends can be. We've been having a green weekend, so that might actually pop up at some point. 24-hour volume, $108.29 billion traded, volume traded this morning. It's down about 7.36%. Bitcoin dominance, 44.12%. Price of Bitcoin, 47,228. Did have that bounce from the 46,000 range. It's up about 0.40%, just a slight bounce there. 24-hour volume, $32.69 billion traded in Bitcoin. Let's take a look at the status of our weekly chart there. We still have that MACD cross and the histogram forming in the green there. We had a pullback, almost nearing the simple moving average there. It got almost oversold. We're at about 60 points on the RSI. Price of Ethereum, $3,115, up about 0.13% this morning. Let's bring in Michael and Naji now. Hello, Michael.
Hello, buddy. Happy Friday.
Happy Friday, Michael. Great to have you. Well, let's look at some news with stable coins. Now, we see USDC is going for chartered federal bank license. What does this mean for the crypto market, and does USDT have that?
No, USDT does not have that at all. It's actually a fairly big step. Officially, Circle, the parent company of USDC, they officially haven't filed the application yet, but their full intent is to. They said it, I believe, in their S1. And so basically what this is going to do is it's going to make them under the supervision of the Federal Reserve, aka the Fed, the U.S. Treasury, the Office of the Controller of Currency, and they also are going to have FDIC insurance. So what this fundamentally means is if Circle becomes a federally chartered bank, the USDC that you have in your account will be insured by FDIC, which is nuts when you think about it, because right now you don't have that situation. You have to just trust the faith of Circle and that they're running the best business practices. But in a situation where you have Circle being highly regulated, the likes of a normal bank. And what's even crazier is, unlike a normal bank that practices fractional reserve banking, Circle isn't like that. They're going to have fully backed reserves, so 1-to-1, and there isn't going to be any of that fractional banking stuff that we have today in today's bank. So it's actually going to be one of the safest banks in the world when it comes online.
All right. So for you now, is USDT or USDC? What's it for you?
Oh, like all my stable coins in USDC. USDT, people use it on a day-to-day basis, but just for the sheer fact that there's just been so much flack thrown against them, I can't comfortably sit with having stables in USDT. It doesn't sit right with me, having that amount of, the fact that they're under investigation right now as well, too, once again, for bank, they broke, I believe it was the bank laws. They lied on their to a bank about what the funds were for.
All right. Do we have a green weekend coming up or not?
Yeah. In the short term, it looks like there has been a lot of accumulation. Okay. And what based on what the on-chain metrics are saying, it's saying that we could be gearing up for that. That 6x run that we saw last November. Okay. That ended in March. We're gearing up for an event similar to that. So the upside is expect at least a 3 to 4x from here. Okay. For Bitcoin. So it's really explosive Q1 that we're heading into.
All right, Michael.
Q4.
Okay. All right, Michael. Thank you so much. Let's hope it's a green weekend. Thank you. Always great to talk to you.
Thank you so much.
Let's see how my coin to watch is doing now. I did give this call at 20 cents. It's trading at 45 cents. Got to a high of about 70 cents. Market cap $1.66 million. Ticker is Babi. It's doing well. Hoping it hits the $1 mark at some point, so you need to watch out for Babi.
I'll be watching, and I know others will be watching too, but always remember, this is not a financial advice.
Yep.
We're just reporting the market. Thank you so much for being a part of this week's Business Morning. It was a pleasure having you over there and us being here.
Right here.
I'm Ini John Mekwa, but it's not over yet. 1:30, we'll be back to give you updates from the world of business.
Thank you so much, and enjoy your weekend.